Hello, everyone. Welcome to another Sunday scan. This is actually a Monday scan for May 26th, 2025, and the week ahead. I hope everybody had a long, relaxing Memorial Day weekend and didn't come to the markets on Monday because they were closed. My name's Anthony. I'm standing in for Chris Lanzalotti, who is enjoying his honeymoon. Congratulations to him and his wife, the newlyweds. Hopefully, they're far away from the screens and focused on everything except the markets this week. A couple administrative notes that I wanted to run through before I bring in Ariel Hernandez to discuss the markets and what he's looking for in the week ahead. So, the first item I wanted to discuss is Investors Underground is having a Memorial Day sale. So, if you're watching the content here on YouTube and you're enjoying what you see, maybe you're interested in testing out some of the awesome new tools and features that Investors Underground has been building, now's a great opportunity to do that. We'll leave a link in the description box below. I highly recommend everybody at least consider it and ways that Investors Underground can bring your trading to the next level because there's just great opportunity for what you get at Investors Underground. There's a new Trading Takes episode with Sam and Emil. Both are moderators in the Investors Underground community. And Sam does a great job in this episode hosting and asking great questions to Emil, who does a great job explaining his trading system. It's very hybrid, focused on intraday and swing trading, both long and short, large cap, small cap stocks. It's a great episode, and I recommend everybody go and check that out as well. Traders for a Cause Columbus is going to be coming up on Thursday, June 12th. It's going to be in Columbus, Ohio at Columbus Brewing Company. It's hosted by legendary trader Tim Grattani and myself, and Traders for a Cause Executive Director Zach Shellhouse will be in attendance, along with a number of great traders. I know a couple people are coming from Pittsburgh and as far away as Canada that I'm aware of. So this is a great opportunity. Anybody in the Midwest or elsewhere who wants to come meet face to face and talk with other like-minded traders, I highly recommend that. And all proceeds are going to be going to the Red Oak Family Foundation. So it's a great cause, great opportunities to network there and build yourself a pod of other traders. So let's get into market thoughts a little bit because it was a very jam-packed, headline-packed week. To recap, the S&P has been strong since April, rallying back about over 20% in just under 2 months, retesting within 3% away from its all-time highs that were set just 2 months ago. Gold similarly is strong. It's been retesting this week its all-time highs that were also set back in April. Bitcoin this week reached a new all-time high of $111,000. So there was no shortage of themes and momentum groups that were trading. In the IU chats, there was a lot of discussion and trading around the artificial intelligence, the AI groups. That was a hot topic. We had CoreWeave, CRWV, which was unwatched from several of the moderators, including Nate. There was great opportunities there, both long and short. There was D-Wave, ticker QBTS, which offered some great opportunities as well. We had Rigetti, RGTI, along with IONQ. And then later in the week, after an executive order announcement, we saw nuclear energy names surging, specifically OKLO. We saw Lightbridge, LTBR, among others, really, really going. So there's lots of opportunities for traders in the market right now. And so, zooming out, there's also a little bit of uncertainty at the macro level. And we saw some of that this week. We saw Wednesday's bond auction, which was perceived a bit negative, and we saw the market sell off, which carried us over into Thursday. And there's also some uncertainty still around US tariffs and what that will look like in the weeks to months ahead. There's international foreign policy and military uncertainty continuing, and we saw some of that in futures markets as well. There was some volatility in oil, among other things. So it's just some things to think about. Next week is going to be at least one big earnings call with NVDA. We'll see how that shakes out. That should be on Wednesday after hours. So there's a lot of opportunities for traders. And to discuss some of that, I wanted to introduce, Ariel Hernandez. Ariel, thanks for being here again for our Monday scan this time. I know you did a Sunday scan with Chris, so welcome.
Yes.
Thanks for being here.
Yeah. Thanks for having me, Anthony. It's always a pleasure to talk to you.
Yeah, absolutely. So, Ariel, what sort of, market themes and general, market thoughts do you have about what's happening and what you saw this week in the markets?
Yeah. Well, really for the last Okay, so if we go back into like middle of April, right? And even in the beginning of April, one of the things that I always stress to anybody that I ever talk to, in particular on my side of trading, which is swing trading, is I always want to be in the strongest stocks, right? Institutional quality, right? I understand that IONQ on Thursday has a 40% day, that on Friday Trump is signing, nuclear announcement and Oklo's going nuts. I understand that more from a day trading perspective, and there being volatility there to trade on the up and the downside, but the percent gain on a single day is awesome. But from my perspective, I always want to be, when the market is pulling back and coming down, I want to be in the strongest stocks, and they tip their hand early. So if you looked at stocks, and we'll run through a few of those, in middle of April, the market actually put in a low in March, and then in April got through that March low and went much lower, had that big washout underneath that. And then on the flip side of that, when you look at from the stock perspective, there weren't many, I wouldn't want to say there weren't many, but there were a handful of stocks that broke that March low briefly and then recovered instantly. And those started to become your leadership because, for instance, a Palantir didn't even retest its 200 simple moving average. Effectively, it didn't even get down to the 200 simple moving average, right? Something like Apple still hasn't gotten above its 200 simple moving average. So while everybody loves Apple as a company, I use their products all the time. I've got a MacBook Pro to my right. I've got an iPad to my left. I've got an iPhone on my desk. They're not the best trending stock. In fact, they're not even the best stock. You shouldn't even try to own them right now, right? So that's always my perspective, is what stocks are acting best when the market's performing worst, and then what stocks are acting poorly when the market has been very strong. And there has been tons of quality. That we're talking about names like Netflix was kind of the first to have earnings. They normally report first kind of in that earnings cycle, and then they break like a little flat pivot, and I get myself involved in Netflix. And then a few days later, you had Palantir, and then a few days later you had Uber and Crowd, and then Hood. And so there's always been these like mid cap, large cap leadership that start to poke their head out first. And again, even when we think about an Oklo, it's not Oklo that started the nuclear move. It's actually your GEV, right, who have this alternative energy for powering, data centers. So it's your GEVs, which is like your large cap, right, energy production company. You've got a name like CEG, which only provides power through nuclear energy, who had bottomed and started to go up. You have a VST, which had already shown you to be a leader in the last year and a half. And so you had all of these former leaders really already starting to push out, and a GEV making a new all-time high. And then, yeah, surprise, surprise, the mid caps tend to follow, right? It's normally how it goes. And then any piece of news will take these things higher because, the options, they're a little bit smaller floats, institutional, doesn't have to have tons of interest, and they might not buy this thing for quarters on end, but it's a nice trading vehicle. It's liquid. Retail gets excited about it. And there's been tons of themes, right? You mentioned Bitcoin. MSTR had been in a nice trend. The issue with Bitcoin is you just had Bitcoin, and you could have played the ETF IBIT and then maybe some MSTR, but you really had, up until coin getting added to the S&P 500, a huge lack of participation, right? You look at Mara, you look at Riot, you look at CleanSpark, you look at what was actually moving this cycle was these Bitcoin acquisition companies. And as oddly enough as it might sound, even at GameStop, right, something like CEP, something like ASST. So these Bitcoin acquisition companies, or that they had SMLR very recently. But then all of a sudden on Thursday, you could see Bitcoin was at an all-time high and MSTR was pulling back and staying heavy all day. Then all of a sudden, Bitcoin has a small down day on Friday and MSTR is getting punished 7.5%. And, part of me goes, there is a legitimate setup out there where you go, something is a double top, right? I don't know if Bitcoin's has done a double top at 100 and, I look at Bitcoin futures, so 110,000. And then MSTR's kind of has front run the move on the way up. And then I'm not sure if it's front running the move on the way down, but really it's been, there's themes, right? You've had Bitcoin, you've had gold as a theme. You've had even tobacco names have been really aerospace and defense. Like I said, tobacco names. It's just been a plethora, right? It's again, the nuclear names. If you look everywhere you look, even semiconductors have come back to life, right? It's not just NVIDIA. Even AMD started to act a little bit better. AVGO actually looks like your leader. A-Lab has started to act better. CRDO has started to act better. Everywhere you look, semiconductors were starting to get their act together. But again, are they a leadership group, right? The market performs better with them. But, there's going to be a lot of charts that we cover here momentarily, but lots and lots going on around the market.
Yeah. And that's what I kind of wanted to focus on in terms of the market thoughts as well, which is like there's so much going on, right? And so what advice would you give to traders who are looking, at social media and seeing all of these either predictions for, SPY's going to rip even higher, and we got NVIDIA earnings coming up, and then people posting huge P&Ls. What's your general advice about times like this in this type of market cycle? Are you recommending people take a step back, wait, focus where your edge is? What type of things are you questions?
Yeah, that's exactly right. You nailed nail on the head. You have to understand your daily setups, and for me, there's only so many. Right, you have an earnings gap up, and then you've had really nice follow through from there. So names like Sezzle and Dave and Oddity and NRG, and so you've got that as a setup. You have your high volume close where you get that earnings gap up, you get the close, and then you get the follow through from there. Again, Sezzle and Dave and Oddity, NRG are perfect examples. Then on the flip side of that, you've got undercut and rallies, which is what we had going back into early April. When stocks couldn't break those March lows and then instantly reclaim, you get the undercut of that like left side low, and then you reclaim. So that's an undercut and rally. So then it's just about a matter of understanding, hey, the market's gotten really beaten up and this thing's already reclaiming that March low versus other things where it's like washing out below that March low and really no strength. It's like in that price discovery mode to finally find a bottom, versus like a Netflix or a Palantir or a Hood, where Hood undercuts $35 and then instantly starts to reclaim it just a day or two later. Netflix undercuts that March low at 854 and then instantly starts to reclaim that level. So I would always tell people, like, know your setups. Don't get FOMO. Use progressive exposure at this point, right? Unless you're a day trader and then you go home with cash every single day, you should be 30, 40, 50, 70%, and maybe even more in some instances, because I can name you a dozen stocks right now off the top of my head that are near all-time highs that gave really clean setups weeks ago. So it's like you might not even have any cash left over to be playing some of these high flyers, right? Your IONQs and your OCLOs. So understand your daily setup. Use progressive exposure. So get yourself involved in the market as you're gaining traction. Focus on stocks in leading groups, not lagging groups, right? I'm not over here looking at solars and being like, oh, EMPH is finally going to bottom or Sedge is finally going to bottom. I remember I had a bunch of people go, Ariel, are you buying First Solar here because it's above its 200? And I said, no, it's had to move 50% just to get back to its 50 simple. And then they'll go, well, you bought Tesla as it was going through its 200. And I said, yes, it consolidated for 2 weeks, a few percentage points above the 200, below the 200. So know your setup, right? Are you really trying to buy something 50%, like after 50% move? Or are you trying to buy something that is like going through the 200 where it's like prior low is just a few percentage points away? So that is way more important. Again, understanding your setup. And then just trying to be in stocks that are leaders, right? Leadership quality, institutional leadership quality. And then again, if you want to trade a few of the speculative names because you got a couple bucks left over, and you got a few, percent in your account that, you want to have some fun with and get to work safely as well, well, then the thematic names, these mid cap, themes are fun to be in too. And obviously what IONQ did the other day, and Rigetti and QBTS and QUBT, that's, it's fun, but you might not be able to be in some of these for the next 6 to 8, 10, 12 months. Like, they might not trend like that. And the part of the reason that I say that is they just don't have real earnings and sales. I'm not saying that eventually they won't, but some of them do actually have accelerating, sales. So that is nice. They do have, there is a positive there, and traders can, take things up as high as they want. But the reality is if you are in a Rubrik and in an SE and in a Zscaler and a Palantir and an Uber and Hood and Netflix and CrowdStrike, and you might have no money left. Right. That's actually a good problem to have, because now you're up almost 10, 15, 20, 30% plus on every one of the names that I just mentioned. And you've got nothing left to do except let things work for you in the market. And Anthony, we'll run through some setups, and we'll run through some stocks, and we'll run through some groups. It's hard to be bearish, right? Even on Friday, when Trump says, oh, okay, it looks like the EU is going to get 50% tariff, things bounce back right away. It seems, seemingly. So, how can you be bearish? Institutions might be underweight, and every little dip seems like a viable dip for them. And, to me, for instance, like cybersecurity couldn't be acting any better, right? I mean, it looks, the groups in the stock and the groups, or like the stocks within the group, are incredible. And they're just steady trending. If you looked at Rubrik, hasn't even had a down day, it looks like, in a month. So.
Yeah, I think that's great advice. And, something that I know you and me have talked about before, which is like, you don't necessarily have to try to anticipate these moves. You could sit back for a little bit, get the information for free. And I know Nate mentions this as well, and find out where the trade comes to you, rather than trying to anticipate what's going to happen next. As a trade sets up and it's within your edge, and a trade that you are familiar with, that might be the time to put on some risk and enter the market, versus, trying to choose whether you're going to short or go long NVIDIA or any other name, in anticipation of a move.
Yeah, anticipating is one of the worst things that you can do, because you might say that you think a stock is going to break out, and then it doesn't break out, and your money's just maybe sitting in a consolidation, or your money's actually going down. I like to get myself into the stocks that are, the reason that a stock is in a top 40 group when there's 197 groups is because they're being accumulated when the market's, they're either not being sold when the market's down, or they're being accumulated more than their peers when the market's going up. So the relative strength line versus other groups are going up. So if the stock market's down 1% today and the cybersecurity names are down 0.5%, the relative strength line ticks up. If the stock market's up 0.6 and the cybersecurity names are up 1%, as a group, their relative strength line goes up. If the stock market is flat, but the cybersecurity stocks go up 0.3, the relative strength line goes up. And you do that enough over the course of 30 days, and all of a sudden, relative strength is leading into new high ground, and you've got multiple stocks within the group that are acting well, right? And you could just go ahead and look at Rubrik, Zscaler, Okta, even PanW held the 200, CrowdStrike. They look incredible. And that's just, some of them are just so far gone that at this point, even for the last, week and a half, I've been saying we need things to flag up. And that's exactly what has started to happen in some of these stocks. They got so far ahead of themselves, even a stock like Carvana. But now you look at Carvana, or you look at a semiconductor name like AVGO, they've been going sideways for 6, 7, 8 days. I mean, they're almost perfect consolidations. The longer they go sideways here, they're not being sold off. They didn't just make a move and then Christmas tree pattern round trip the whole move. They are going up, and they're going sideways, and they're tightening, and they're allowing moving averages to kind of catch up for potentially that next leg higher. We don't know that it's going to happen, but on the day that we buy it, we align our buy within a good market, and we align our buy with other stocks in that group acting well. And then a market pushing higher. It gives our stock the best chance that had already been showing relative strength. So it was on a moving train. It consolidated. The train kind of stopped at the station, and then it started to take off again. And you bought that, and then your stop is going to be low of day or prior low of day. So if you're wrong, it's peanuts. If you're right, you're now on that moving train again.
Mhm.
And that's really the whole idea, just aligning yourself within the group that's been performing best. And anything within the top 40 will do. Just avoid stocks with, that are not in the top 40 and not setups that you understand and not extended. So
Yeah, yeah, and I think that's great advice. Let's dig into some of those groups and names that you have on watch. Before we do that, I'm just going to mention real quick as a disclaimer. Neither Ariel or I are financial advisors, and these are not buy or sell recommendations. This is for informational and educational purposes only. So, with that in mind, Ariel, take us through what you're looking at for the week ahead.
yeah. Okay. So we've got quite a bit. And I guess just quickly, I will touch base on these stocks that have been acting amazing. And what I mean by, we need a little bit of sideways, right? So in the cyberspace, right, you looked at this rubric. And this rubric, as soon as it got over its 50 simple moving average and it had a very little subtle gap up, right. And again, we were talking about the very first setup on this stock, right? So the very first setup is you've got your low in March. It tried to break its low in April, could not, found support on not only the rising 200, it undercut price and instantly rallied back through, right? That was on that Monday. On Wednesday, the stock market had a huge up day. I mean, massive up day. And that was that Wednesday. We all remember it was like the 90-day pause on tariffs and the stock market had like a 12% up day. Okay. So then all of a sudden, these stocks are building this like little tiny shelf right in here where it's like you've got, that Wednesday's high that needs to be cleared. And it does. It gaps not only above that little shelf, it gaps above the 50 simple moving average. And then effectively you're off to the races, zero consolidation. Right. Obviously, Zscaler is another one within that group that has just been acting awesome. Right. It shows you these 217 tops, a handful of times, multiple times, finally gets above 217. And you are talking nonstop, effectively every single day, just trending above its moving average. Right. Okta, very, very similar. This thing in April couldn't even get down to its March lows. Right. So that just goes to show you how strong it was. Has that big up day with the market on 4.9, builds a higher low. Again, a very nice little subtle gap up with massive volume, takes out all-time highs 217. Been a very, very steady trend since. And that's just in the cybersecurity space. Obviously, CrowdStrike, one that I owned, I should preface by saying that, had an undercut and rally. Same thing, had the March lows, couldn't really break the March lows in April, and then had this nice little flat pivot right at $400, and then a little subtle gap up, $400 being a nice whole number. I bought it. I unfortunately got way too impatient with it on this day here, a pickup in volume, kind of a topping tail. I was like, I'll just let it go and I'll buy it when it breaks out. And then sure enough, here we go. take out Friday's high, or take out Thursday's high on Friday and then make a new all-time high. And again, this is now a cup, and it's built a handle, and it's, again, a cybersecurity stock. It hasn't been trending as beautifully as Zscaler and Okta and the others, but it just goes to show you, like, when I'm doing my homework at night, are there more stocks within the group that are acting well? That's signs that institutions are buying the heck out of these things, right? So, kind of when I'm doing my nightly work, right, it's not just one stock. It's 3, it's 4, it's 5 of them that are acting well. Stocks that were also acting well, coincidentally, is the CCJ, right? CCJ broke its March lows, but reclaimed them fairly quickly, started to trend now above, again, its 50 simple moving average, got above its 200, and then just went sideways. And this was very healthy. Then obviously you get that Trump news that he signed. And anybody who doesn't know Cameco, they mine about 10% of the world's uranium. So you can't talk about nuclear without including Cameco, because they're the largest uranium player that's publicly traded, right? Kazatomprom being your next biggest, but they are not publicly traded. And obviously a big pickup in volume. Would not be too surprised to see Cameco going a little bit extended here for me. But, if we're going to talk about that nuclear theme, you can't include, that power generation theme without GEV. And again, a series of higher lows, tried to break March lows in April, could not do so. You get an undercut and a rally right back through. Wednesday, that big up day. Nice little shelf that was built here. Earnings, it looked like it was a kind of an earnings failure. The next day goes right back through the pivot, $350. And then now you're just trending above the ascending 10 simple moving average, effectively in perpetuity since that point. Nothing really to do with it here. If it would tighten and go sideways, similar to what we saw, here's a moment where I thought it was really nice. It just trends. This is how powerful the stock is. It just trends. And then there will be a point in time when the thing just goes sideways for a while. So it'll go sideways. It'll build just a little sideways consolidation, like a little flat base. And then eventually it'll break through that flat base. And then you can go ahead and get yourself on. Now, this down day here was DeepSeek, and you can't really predict, that something's going to do something like that on DeepSeek. That's just part of the why position sizing is so important. But, the stock ends up recovering, builds a whole new base. Market goes through some pretty nasty turmoil. And this was one of the first few stocks that had a very, very difficult time breaking March lows and staying beneath. And then again, held its 200-day moving average, undercut and rally, a little flat base, nice reaction to earnings. This thing has all the makings of a monster, but you don't just get FOMO and be like, I got to own GV, let it tighten up, let it go sideways. And really, this is kind of what we're noticing with a lot of these stocks that did go on to make really big moves, right? Your Netflix is the same deal. You had that low in March. You tried to undercut that low in April with a pretty crummy market. It undercut that level. It reclaimed right away. It formed that exact same little shelf over Wednesday's high, got back through its 50, and I bought it because earnings was a few days later, not on the earnings day because the market was really, really pulling back that day. And I always tell people, make sure you, as a swing trader, you align your buys in a good market. It gives your stock the best opportunity to just do what it was going to do, which is if it wants to push away from your average and push away from opening print and push away from the 5-minute opening range bar, a healthy market and a market that is now, in my opinion, bottomed, right? Netflix isn't going to really see much market pressure, right? And the market had like that nasty breath day. I could even pull it up on the charts. And then the very next day, it looked like a follow-through day. And then, I'm buying Netflix at 1,019, and you've got absolutely no headache in what I believe to be one of your stock market leaders. So, that just goes to say there's a lot going on in the market right now, but now we are looking for stocks that are hanging out best and flagging. And so, again, you get your bottom in something like AVGO, and then you get a series of higher lows. And then now you just get this, perfect sideways here, right? You're not even going down. You're not doing anything. Market gets hit. Trump says this. Market goes down on Wednesday, flat on Thursday, down on Friday, and AVGO is effectively flat, right? And remember what we talked about, we prefaced by talking about relative strength line, right? This is exactly what I'm talking about. Right? The market goes down, this thing maybe goes down a little less. The market goes up, this thing goes up a little bit more. The market is sideways, this thing goes up a little bit. And so its own relative strength line is actually making a new high because the stock market went down 1%, in particular the NASDAQ, and AVGO was down 0.79, right? Its relative strength line is actually making a new high before price is making a new high. Right. So that's very, very important to remember. And then again, you've got this little shelf here. You've got a consolidation just under that shelf. Ideally, it goes sideways for a little bit longer and then begins to power through that level. And AVGO looks like your semiconductor leader, right? NVDA being maybe second place. And then you've got, your third, fourth, and fifth place from there, with maybe something like TSM, right? You get the bottom. You get a series of higher lows, almost like AVGO, and then you get a beautiful sideways consolidation. The nice part about these sideways consolidations, as semiconductors are starting to act well, the market starts to turn back up. You've got a really nice range to work with where you say almost a nice horizontal line, good above that line, bad below that line, right? And I'm not necessarily having to guess with some like downward sloping trend line where I don't like downward sloping trend lines because they're very subjective. Some people draw them through the tops of wicks. Some people draw them through the bodies. Some people draw them through, they'll like cut through some candles and it'll be like, what the heck kind of downtrending line is that? Horizontal pivots work great because it's just good above that pivot, bad below that pivot. So There is tons to work with out here. Even if we go to another group and we look at aerospace and defense, right? A really nice breakout from all-time highs on DRS, really nice move up on earnings, right? The market hasn't been doing too much. DRS needed this sideways consolidation and has just done just that. And, if it can kind of get through, and again, this is why sometimes these downward sloping lines, you start breaking through bodies and through candlesticks and you start going, what the heck is going on? But the reality is, if we just remove it and we were to just look at it objectively, you'd say this thing is in a clear uptrend, right? That it's trying to hold its 20 simple moving average. It's getting tight on the right-hand side of the chart. It's giving you a low risk spot to buy it in case you're wrong, right? And then it's not just DRS, right? It's something like KTOS. And then it's something like, which is doing something very similar. Again, trying to break out over this little all-time high on the left side peak. And then you've got HWM that has just been your leader within the space. So again, aerospace and defense, it's a top 5 group, if I'm not mistaken right now. And if you just kind of look around the group, it has multiple stocks within the group acting well. And that's always something that I want to focus on, right? Stocks within the top 40, clean technical setups. If they've got earnings and sales, that's like the cherry on top. That's what institutions look at and say, hey, I'm getting behind that company. They've got really good earnings and sales, right? They're growing our money at 30%, 20% quarter over quarter. Lots to work with right now. I just think that the market could use a period of digestion, and it's giving us that, actually, right? You get a pullback on Wednesday, kind of nasty day. Like I said, pretty much nothing on Thursday. Friday, another down day. I think it's perfect because there are stocks near or at all-time highs that just have these beautiful consolidations, or they're just like chugging along. Even if you looked at like SE or Palantir, Uber, Hood, we didn't even pull those up. Those charts look amazing. And some of them, for instance, like maybe something like Uber or like Palantir, they're finding support on the rising 20 simple moving average. They're building out the right-hand side of the chart. They're effectively at all-time highs. And the market's struggling, or maybe not struggling, but just kind of churning around its own 200 simple moving average, and would still need to make a 8-10% move to get back to all-time highs. So, there are plenty of stocks to work with right now. And it's hard to be bearish when there's so many things acting bullish.
Yeah. Yeah. Thanks so much, Ariel. That's a ton of really insightful information. And, from the swing trading side, it definitely seems like there's a lot setting up right now. And, I think that's very useful information for the intraday traders, the day traders, because they might be looking at something just from a particular intraday lens. They might be a little bit more bearish. And if they bring that bearish bias into their trading, that could be a recipe for a disaster when we're so close to the tops of the market, so close to SPY's all-time highs, for example.
Yeah, and if people want to be bearish, I think that that's totally fine. But then the reality becomes is if you want the least amount of headache on your shorts, and who doesn't, focus on the things that have been weakest. I have a tendency sometimes too to maybe pick on a name for like a first red day kind of a trade, like on CoreWeave. I did a really, really nice job of shorting it myself at $113. So, okay, yes, fine. I'm guilty of it too. Something looks overextended, looks overdone, overcooked, whatever word you want to use. And then you go, okay, I'm going to come into this thing and short it. And then the very next morning, I get the Trump news too. And we're washing out to, 97, 96, which of course I'm peeling some off right there. Great. Nice, super nice trade. But if you really, really want to swing something, even on the short side, you got to ask yourself, when the market gives you a distribution day, what are the stocks that were already acting ugly prior to that distribution day, right? It's stocks in the XLV, it's some home builders, it's solar names. Everybody got really excited when solar, was ramping up for a few days. And then all of a sudden you look at EMPH, and then just like that, new all-time low, or, new 52-week low, right? And you're just like, what the heck just happened there? New 2-year low, like, that easily. Right, where these FSLR, it's ripping, it's up 50%, it's above the 200, and then all of a sudden a day later, it's right back down through the 200, and then it's gapping down overnight, and then it's down some more, and then it's down some more, and you're just like, what the hell just happened? right? Sunrun, RUN was, up and up for multiple days and back through the 200 and cool, looks awesome. And then just creamed. And so the reality is that just because you get up to the 200, you have to establish it. Like I always tell people, I bought NVIDIA when it was going through its 200 going into 2023, but the best setup on it was after the stock had actually tripled, right? It's like I bought it, at $167 and in the 170s. But then when the stock gave me a 5-month sideways base, that's when I liked it the most. Yeah. That's when at 500, when it broke the flat base breakout, the stock had tripled. Yeah. So it was well established above its 200 that it was in an uptrend. So, and it was in one of those nice uptrends because institutions had accumulated the heck out of it, and they never let it go low. I mean, they tripled it again from there. So, I always tell people, if you are unsure, go back and study a chart like AMR, look at it on a daily chart, put a 200 simple moving average on it, go back 5 years. When it got above its 200 day, it was like $5-6, right? I didn't come in and buy it until February of 22 at 65, right? And then it still goes to 185 in no time at all. So it had gone from dollars to 185 in like a little over a year. And then it went sideways for a year and a half before going from 180 to 400. So it's like, focus on the things that are in uptrends. Don't look at it and be like, it's up too much, I got to short it. No, in reality, if it's up too much, it's because institutions are buying the heck out of it. Now just let it go sideways for a little bit. It's already a moving train. How do you get on that thing?
Right. So, right. Yeah. Wait for the consolidation, and not just when something touches the 200 moving day average. There's United Health, which we just saw, go far below the 200 day. It doesn't necessarily mean that's the time to buy, as you're mentioning. Wait for something, especially in a swing trade. Wait for some strength, because that's probably when you're going to get the move that you're looking for.
Yeah, and I had kind of teased, because there was somebody on CNBC, I'm not going to name names, people can find him, I'm sure, but he was buying United Health on the first day. And if you want to pull up the chart, this is why you want to be very thoughtful of that, because, it was this very first day, this thing on earnings cracks really hard on a big pickup in volume underneath the 200 day. Some gentleman on CNBC comes on and saying that he's buying United Healthcare. Right. It's overdone. It's this, that, and the other. And if you had actually zoomed out, even on a weekly, you would have noticed that this was a big time level of support, right? How many touches do we have near 450, basically 440, multiple. So all of a sudden, somebody on CNBC, they're buying it, and, it's overdone, it's overcooked. But I was saying it's below the 200. You do not buy these earnings gap downs below the 200. And then, sure enough, a few days later, we're gapping down again, and they're buying some more. And then a few days later, you're gapping down again. It's like you're buying some more. Well, it's like, if you loved it at 440 and you loved it at 320 and now you love it at 250, at some point, your cost basis is probably like $380, and you might not get your money back for a long time. Like, yes, are they a good company? Might they eventually come back in a really long time? But what you're losing when you do stuff like this is you're losing the ability to compound your money. Because now all of a sudden you've got a terrible cost basis. You maybe have 20% of your portfolio there, and it's in a downtrend. Whenever it just gets back to your average, when you average down like that, you're going to be a seller of this thing. So you'll have made nothing and you'll have lost time, which are two things that you just can't make back in this money, or in the world. You can't get back time. And so you're losing out on that time to actually compound your money on things that are going higher, because you're just guessing things buying lower. And UNH isn't the only example of this, right? It's like DEC had something really, really similar. You gap down really heavy on earnings, you leave it alone, right? And then all of a sudden you don't leave it alone, and the thing goes from 180 to at the end of the quarter, $90 gets cut by 50%. And when it gets below the 200, it's really a leave alone. And then it tries to get a little bit higher. And Ariel, and I was asked this, do you think DEC is starting to look like a good flag just because it went up and then went sideways? And my answer to that was no, it's below the 200. And then what happens on earnings? Huge gap down on earnings again. So it's like, imagine just the amount of time wasted trying to cherry pick something that's below, let it establish itself above the 200. If you want to pick on stocks below their 200. Yes, again, I get the allure, myself included, of like, being right and shorting the top on something, and then, it finally cracking for you. But it doesn't work that great. It's much easier to short things that already kind of broke down on earnings, had a negative earnings result, and then, maybe they'll bear flag up, or maybe they're breaking the 200, and then you've got clear levels to work with, and you've got clear descending moving averages to work with. And again, if you want to be long bias, focus on stocks in the top 40 groups, which coincidentally are the stocks that maybe look most extended.
Yeah.
They're the stocks that are going up the best. And everybody's just like, oh no, those are up too much. No, those, you have no idea, right? And none of us knew NVIDIA was going to go up 1,000% in 2 years, and that's just what it did. It's like, so, but you got, even I was in the bank, like in the camp for a little bit when NVIDIA was like 380, 400, or I'm just like, okay, this thing has gone up too much, maybe. And then it just built a 5-month base. And then at the end of that 5-month base, I was like, this thing is starting to look damn good. It's done nothing wrong after tripling. So yeah, there's tons of lessons in that, and tons of stocks that are acting well. I would tell anybody, for the week ahead, my big focus is, stocks that have performed well on earnings, and stocks that are coming out of flags, whether it be an AVGO, or even a Carvana, for instance. So, or even maybe gold names that are starting to, kind of finish out the right-hand side of their charts too.
All right. All right. Great. Thank you so much, Ariel, for sharing your market thoughts and your watch list for the week ahead. I really appreciate it. And, just to reiterate those conversations and those themes we were talking about a little bit, you don't necessarily have to predict and anticipate and put risk on the market, trying to guess what's going to happen next. You could sit, you can wait, as Ariel is saying, wait for the consolidation. And then also, you can always, just focus on the trade and the edge that you've been working on, your strategy. You don't have to jump strategies. If a trade comes to you and it's something that, for example, Ariel is discussing, the trades that are setting up for him, those are the ones he's going to focus on, not just going to look at what is hot at the moment and then just try to trade that. So trade within your trading edge and your strategy, and you don't have to necessarily anticipate. There's going to be trades, on both sides. Just get in where you fit in, trade them well, trade them safe for the week ahead, and we wish you the best. Have a great week.
Thanks, Anthony.
Yeah.